Welcome to Earnings Central. In this video, we'll break down Nike's second quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q2 was $12.1 billion. The company actually reported revenue of $12.4 billion, surpassing expectations by 2.5%. However, this quarterly revenue marked a 7.5% decrease compared to the $13.4 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q2 was 67 cents. The company actually reported an EPS of 78 cents, exceeding expectations by 16.4%. However, this result reflects a significant 24.3% decrease compared to the $1.03 per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Nike's gross margins took a hit this quarter, dropping 100 basis points to 43.6%. This decline was primarily driven by higher markdowns in Nike Direct channels and increased wholesale discounts as the company worked to clear excess inventory. Speaking of Nike Direct, this channel saw a significant 14% decline year over year, with Nike Digital performing even worse, dropping 21% compared to last year. This dramatic decline in digital sales reflects the company's strategic shift away from heavy promotional activity in this channel. On the cost side, Nike managed to reduce its SG&A expenses by 3% compared to the previous year, although this was partially offset by increased investments in sports marketing. Inventory levels remained flat year over year, but this masks some regional variations, with North America and Greater China seeing elevated levels while EMEA and APLA showed declines. The wholesale channel also faced challenges, with revenue declining 4% compared to last year, reflecting ongoing challenges in the retail environment. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The most significant shift is Nike's return to a sport-centric business model. New CEO Elliott Hill emphasized that the company had lost its obsession with sport and is now refocusing on putting athletes at the center of every decision. This represents a major philosophical shift in how Nike approaches its business. Another major change is the planned reduction in classic footwear franchises. Nike acknowledges that it became too reliant on a handful of sportswear silhouettes and is now working to diversify its product portfolio. This ties into the company's shift away from a promotional digital-first strategy toward a full-price model. Nike plans to significantly reduce promotional activity on its digital platforms, which currently sees about 50% of sales coming from discounted products. The company is also substantially increasing its investment in brand marketing. They're moving away from performance marketing focused on driving digital sales and returning to bold, creative marketing that leverages athletes and key sports moments. This includes recent extensions of partnerships with major sports leagues like the NFL, NBA, and WNBA. A crucial part of Nike's strategy involves rebuilding relationships with key wholesale partners. Hill personally met with leaders from major retailers like Dick's Sporting Goods, JD Sports, and Foot Locker, acknowledging that some partners felt Nike had turned its back on them in recent years. The company is committed to providing these partners with better access to products and marketing support. Finally, Nike is focusing its efforts on 5 core sports categories: running, basketball, training, football, soccer, and sportswear. This concentrated approach aims to drive innovation and growth in these key areas before potentially expanding to other categories. These changes won't come without short-term pain. Nike expects revenues to decline in the coming quarters and margins to face additional pressure as they implement these strategic shifts. However, management believes these changes are necessary to position the company for sustainable, profitable growth in the future. That wraps up our recap of Nike's second quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.